What's up, guys? I thought I'd post this video real quick because I haven't posted in a while, and I felt like I should really do this, just going over basically how to save time getting into trading, specifically day trading and swing trading as a new beginner or retail guy. And I have 5 years of experience trading futures markets and derivatives and ETFs, mainly the index futures. I've taken tens of thousands of dollars out of these prop firms using different concepts, but there's just so many distractions and different paths you can go when you first get into trading as a beginner. You got YouTube and courses and all this BS everywhere, and I just wanted to make a clear, basically cutthroat video going over the realistic expectations and how the trading industry, especially for retail guys, is really constructed. Basically the mechanics of the retail space and how to keep yourself from going down these pitfalls and basically save years of time from going down this route, because I've done so many different routes, especially when I first started. I just did everything wrong. I mean, basically wasted years studying something that never really should work and didn't work, and I go over here and over here. And it's not till you really understand the basic fundamental market mechanics that you can really become or start to become a successful trader on your own. And sorry, I just got back from the gym and thought I'd post this. So as a beginner in the retail space, I'm just going to go ahead and say there is no course, no YouTuber, no strategy anywhere online or on the internet that you're going to find that's going to make you profitable. There is no trader out there selling courses and selling their strategy that is a real profitable trader. It just doesn't exist. End of story. And even if you find something like that, it's only going to be a temporary win. Maybe a year, if the strategy works, and then it's over, right? That just doesn't. Real traders are not selling that. They're not, online selling BS or trying to teach you things. No, it's just because the industry of the beginners, how many there are trying to get in the trading space, is so vast. It's so easy to get people to buy a course just because you know a little bit more than them. But in reality, these real hedge fund guys, these real traders, these real investment bankers, they know it's all BS. So those are the guys you should be watching. Those, there's material on YouTube of those types of interviews, right? Of real investment bankers, of real hedge funds guys telling you the realistic expectations of day trading and how basically impossible it is for a retail guy to become profitable in the trading space, especially the day trading space, with these returns that people are talking about, 2% a day. I mean, you do the math, 2% a day for a couple years. I mean, you're the richest man on earth. You have more money. It's just not realistic. And especially one of the biggest retail trading gurus on the internet, I'm going to say ICT. He's the smartest marketer. He really grabs the attention. His concepts, some of his concepts really work. They have value to those concepts, but the market is not an algorithm. And before all the ICT guys click off this video, just learn basic market mechanics of order flow, not candlestick order flow. I mean order flow. I mean just some of his base. And I went down the ICT route for years, and I made money out of prop firms doing it, but it's only temporary. That's not the real market. The market is not an algorithm. As long as we wish it was, because it's just so much easier. It's like a cop out to just believe that it's, oh, my sister's coming home from walk. Sorry. It's just so much easier to believe that. And there's just a few concepts just to disprove that real quick. So you save years of time, because you go to his YouTube and he's got, mentorship series, like infinite amount of videos, which is his business. He can't make money trading. And you can go into videos on that, and ICT traders might get mad. I'm not saying his concept doesn't work. A lot of his concepts have a lot of value in them. He didn't create them, though. I hate to say it. He didn't create them. We're talking from people like Stoudemire in the 80s with the auction market theory, Dow theory. These things all existed, imbalances in price. This is basic market mechanics. But since those basic market mechanics aren't taught to the retail guys, because all the retail guys are getting these BS guru motherfuckers, they're just teaching, you know, whatever they want. They're not teaching actual auction market theory, which is how the real market operates and where you can build a strategy out of. Like, how are you supposed to trade a market when you don't understand the underlying mechanics of it? If you believe it's an algorithm, and I'll say maybe there's a couple of you that it gives you a frame to work with, but if you really want to be that next level successful trader, which is if you're getting into it, hopefully you do, you can't go in with the underlying wrong. And just a few things. I'm going to make a playlist of just a few videos, couple hours of videos that every beginner trader just watching this will save you, like, I'm not kidding, 1 to 3 years, 4 years, or your entire trading career if you go down the wrong path. Because you go down the wrong path and just give up, right? I'll make a playlist. It'll be public on this channel that you guys should really go check out. And I've gone down this path and it's horrible. You waste time. It really does permanent damage to people's career. That's why I hate the guru trading space so much. It's like all these new people trying to make a life for themselves, make a new life. It's just not realistic. They're selling something fake, and there's just no strategy out there that's gonna get sold to you. It's up to you to make that strategy. There's tools on YouTube for free everywhere. You can learn these tools and not strategies, but techniques on how to read order flow and what this means. It's cool. There's no strategy that's going to tell you here's a you know, a 60% winning strategy at a 2-to-1 risk reward. That's up to you to decide. No one's going to go on YouTube and tell you that, hey, here's how you do it. That just doesn't exist. They're keeping that to themselves, because as soon as they give that out, now that edge, right, that edge is no longer valuable. And just a few things. So definitely you need to go check that playlist out if you're going to get into the space. And I have 5 years experience. I'm still young. I'm still learning, just like everyone. Even 20, 30 years, the market's changing. You constantly need to act like you don't know anything. Like the principle from Ray Dalio, like, just act like you don't know anything. Because as soon as you act like you know something, and this is the problem with a lot of the ICT stuff, as soon as you act like you know the algorithm, you know this, that's when you start to really make some major, huge mistakes. And just a few things to understand about going down the ICT route is that it's horrible to see. He's got like almost 2 million people following him. Like, that's 2 million people that, you know, 99% of them are getting duped. They just are. I mean, maybe some of them can find a strategy out of that works. That's awesome. But as soon as you go in like you know everything, that's when it creates issues. And so I can confidently say there's a lot of issues with the ICT traders or SMC traders. Again, I'm not saying his concepts don't work. A lot of that stuff has a lot of value to it, but the fair value gap and these things, they didn't come from him. All right, you got to do a little bit of research, literally just a little bit more past ICT and the retail guys to understand real market mechanics. Like buy side and sell side liquidity. These terms make zero sense, right? You got buy side and sell side. The buy side is referring to people that buy the hedge funds, the pension funds, the university endowments. These are the buy side, the people that are buying the assets. Sell side, you have like the market makers, brokers, the exchanges. Those are the sell side of things. And then liquidity, oh, he gets it so wrong. Liquidity is basically the ease at which, hold on, let me make sure that's good. The ease at which contracts can be traded with a limited amount of volatility. Basically, consolidation ranges, lots of liquidity. Basically, a lot of buyers and sellers, they agree on that certain price. There's no discovery of price. They're like, this is relatively fair for buyers and sellers to exchange contracts. So it's very liquid, in and out. That's where the term comes from, for contracts to be bought and sold in a certain range. So the fact that his whole thesis is that market seeks liquidity, I guess it does. It's always searching for what fair value is, right? That's the whole market. But it's not seeking sell stops. And before you guys click off the video, here's a basic thing of market. You have liquidity, right? Liquidity is, you got two things. You got passive buyers and sellers, basically your limit orders, and you got the aggressive buyers and sellers, your market orders, right? The passive buyers are providing liquidity to the marketplace for the buyers, the aggressive buyers and sellers to fill, right? Because each trade needs a buyer and a seller. So the passives are getting filled, the aggressives are taking. One's providing, one's taking liquidity. Now, when you go in at a market order and you put a take profit, your take profit's going to be a limit order. You're providing liquidity now. You're a passive limit order. Now, when you put a sell stop, this is where it gets crazy. And ICT traders don't understand this. Sell stops are not passive orders, guys. The market and the market makers cannot see those because they are at market orders. Just think of it. If it was a passive order, say you bought in and you put your stop below here. So now you're at a sell limit below. That makes no sense. If your sell limit's here, it's going to pair you with a buy limit order. And then that's exchange and the whole market erupts. Like there's no market at that point, right? That can't happen. So your sell stop is a market order, and this is why when price comes down and you don't get filled at your sell stops, because you're a market, first in, first out, right? So if you're market, you might not get filled till down here if the book gets swept. This is basic market mechanics. So your sell stop is held by your broker, right? Your trades go through your broker to the exchange, right? Your limit orders, they're providing to the exchange. Your limit orders, your aggressive orders, straight to the exchange through your broker, sometimes straight to the exchange. Your stop orders, though, your broker is holding those and saying, okay, you have a stop order here. We'll take that into note. And when price comes down to this level, we'll execute that at market for you. This is every legit trader in the industry knows this. So the market makers cannot see your stop losses. Your broker can see them. So that's when maybe in Forex or EFTs and derivatives, that can be, you can get stopped out through spread and stuff, through some corrupt kind of broker manipulation. That happens, but not in futures. If you're trading futures, that cannot happen, right? That's not going to happen in futures. The market makers can't see your order. End of story. That right there destroys all of ICT's algorithmic bullshit. And I get it, because it looks like when you learn the concepts, it fucking works, right? You see it and you're like, oh, this worked, the fair value gap. Yeah, but it's work. You're not uncovering the underlying reason of why it's doing what it's doing. You're just looking at the chart and candlesticks, which show you nothing. Open, high, low, close. It's important information, but it shows you nothing. You're not seeing the actual footprint, the real order flow, the buying and selling, the interaction between buyers and sellers and what's going on. Are the aggressive sellers really putting in work, and is price not moving? Is the passive buyers just absorbing that price there? Is there a big guy in the market right there propping it up at that level, right? And to think that there's an algorithm based on taking stop losses is ridiculous, because less than 5% of the overall market volume is retail. Guys like us in the market trading 5 contracts, 10, 50, even 15 contracts, which is huge. I don't know, like retail guys, props to you. I'm not trading 50. Maybe you're a scalper looking for 2-3 ticks or something. They don't care about that. You think they're really moving the market hundreds of points to take stops out of the market at some place? No. It's an interaction between buyers and sellers. And so that right there is going to save you a lot of time. Just don't look on YouTube. Don't go to YouTube, find a course. Don't find this. I'm going to give you a little playlist of like 5 videos that you should watch. Maybe some interviews and stuff that you need to watch to get some realistic expectations of what to expect in the market. And sorry I get passionate about this, but I was duped for a lot of years when I was 17, 18, 19, trying to get into trading. And I thought I was a smart guy, and that was the problem of going into it, right? You think you're smart. Like, that's a problem too, obviously. But I could have saved years of time and years of money. Tens of thousands of dollars by just understanding these few things and taking the extra step and going a little bit further. And so I'm making this video to kind of help these new guys coming into the space, because you're not going to find it on YouTube. You're not going to buy a course and you're going to become profitable. None of that exists. It is up to you. This is an independent, right? This is an independent sport. Maybe have groups to like bounce strategies and ideas off of, right? But for you need to come up with your own strategy using different tools that you learn, maybe volume and delta and order flow, and not candlesticks, real order flow, right? Even depth of market can be super manipulative, right? And that's why I think the footprint chart is the best to go off of personally, but that doesn't matter, right? You're going to use what you want to use, and you're going to have your strategies. But don't be using these crazy indicators or believe that the market is ran by an algorithm when it's just not. Basic market mechanics tell you otherwise. And you can watch every interview with any legit trader that's traded on, any investment bank or hedge fund. They're going to tell you that. And even if it was, do you think they would care about retail stops? They don't. And the real power, we're just little guys in this huge game, right? This huge hedge fund game and investment fund game. And there's just so much to it. There's hedging, there's arbitrage, there's so much to it that dumbing it down to an algorithm is just, it's unbelievable that that creators have created such a following. It shouldn't even exist on social media, the trading space. It really shouldn't even exist, because the real guys, they're not on there. Maybe there's a few doing interviews now and then, but it's so few and far between. I mean, most of the stuff that you're looking at is like 10, 15 years back, before it got, even 20 years back, before it got so oversaturated with bullshit, gurus, right? So just to save you multiple years of time, I'm going to provide a playlist on my account so you guys can watch. But I just really think it's important for people to realize this, that this is an individual sport, and you're going to have to come to the realization that you're going to have to figure it out on your own. Unless you pay a lot of money for some mentorship, or somebody, not mentorship like ICT, I mean mentorship from old guys that, traded on the floor, or were traded at banks, stuff, not like these YouTubers, okay? And usually the best traders know somebody that, traded at the exchange or something like that, right? It's not coming from YouTube. It's just not. And it sucks because all the guru shit gets promoted on YouTube and whatever the fuck you're on, because it's what's get a lot of clicks. It's easy to understand, support resistance and fair value gaps, and like ICT, it's elementary. It is elementary. Coming from me, I've watched all the ICT shit the first couple of years. I've practically mastered his shit, and it made me money sometimes. It did. And I still use some of the things that he talks about. He didn't create any of them, like fair value gaps and imbalances. Like, this all existed. Fair value, what he calls accumulation, manipulation, distribution. Those are all, that's shit that's already existed, just using different names. And to say that he created this code or something when he's saying buy side and sell side liquidity, which is like, makes zero sense, because that's not liquidity. Usually when stops are getting hunted, the book gets swept, right? The order flow gets swept. You can see that on a footprint chart. You can't see that on a candlestick. You can't. So sorry to get so passionate, but I want you guys to save, like, this 20-minute, 25-minute video is going to save you guys years of time. Just understanding that it's an individual game, and there's no one on social media that's gonna give you a strategy, right? The best things that will come from reading older books, and even books can get scammy a lot too. But it's gonna come from books and your own time. So you're gonna have to look at all these tools off the real mechanics of order flow, of the market, of fundamentals, right? You got to understand this stuff, and then understand tools you can use in combination with the mechanics to create a very mechanical trading strategy, one that has set rules and set numbers that you can back test, right? This is your first, year to 6 months of trading. You're coming up with these strategies, you're looking at the market, you're like, oh, maybe this, tweak this. Oh, I got this strategy here, it loses sometimes, or it loses most of the time, but I can tweak it. And then after 2-3 years, you can add some discretion to that, some discretionary trading. Once you get to know the market, and that's when you can really start to move forward with your trading career. But it takes time. Don't expect 2% a day. It's ridiculous. All right? It's just, if there was a 2% a day out there legit, they'd be richer than Elon Musk and Jeff Bezos combined. That's just basic math. And maybe it can get capped off at a certain limit because you can't put that many contracts or position sizes in. But even then, wouldn't you just start right back over? you would just start right back over, learn, just like compound it up. Okay, start with a small account, compound it, and just be taking money out. And maybe those guys exist out there doing that, but they sure as hell ain't on YouTube talking about it. They sure as hell ain't there. They are, you don't even know their name. They ain't out there promoting it or nothing. So it's an individual game. Learn the basic market mechanics. Listen to the older legit guys with proof. And if they don't show their P&L, just forget about it. And don't buy any courses. There's no reason to buy any courses. This is an individual game you need to figure out. So I hope this guys, this video helped you guys a little bit. Subscribe, like if you guys want me to go into basic market mechanics, or maybe make a couple of my own videos. I'm not selling anything. I'm just trying to help the new guys out, because I don't want their career to get hurt like I did. Like the start of my career wasted so much time and money. I don't want that to happen to new guys. I want them, like, listen, like, here's the true facts. Don't get blinded by all this. Don't go on the social medias and don't go on these guys. No, don't do that. Let's learn basic mechanics. All right, and then you need to use your brain. It's a hard game, and come up with something. Right? Come up with your edge, but it's gonna take you a while. It's just how it is. And then you got to add some discretion to that too, because the market's constantly evolving. So I just wanted to, you know, come on here and talk a little bit. I hope this video helps. Leave a comment if you guys have any questions or whatever. I'm gonna make sure that playlist is there. But yeah, I'll see you guys later.